Everyone, and welcome to Money Control. I'm Karunya Rao, and today we're here to talk about the big news of the day, which is Adani Group's announcement to acquire Holcim stake in Ambuja and ACC for a total of $10.5 billion. Ashwin Mohan, my colleague from Money Control, joins us, and Ashwin, you had the story before anybody else that Adani is going to be the front runner of this race to acquire Holcim's assets in Ambuja as well as ACC. Talk to us about the big numbers here at play, and more importantly, how will Adani fund such a massive acquisition?
Right, Kanya, thanks for that. So it was clearly a busy Sunday evening for all of us. Adani taking the entire India Inc. by surprise by going ahead and very speedily sealing that deal with Holcim. Now, let's first look at some of the key numbers that are part of this mega transaction. Keep in mind that it's the largest ever acquisition by the Adani Group, and it's been growing at a frenetic pace in the last few years. It is also the largest ever transaction in the infrastructure and material space. Having said that, what's the deal value? The deal value, including the open offer, is $10.5 billion. So what's going to happen is that Adani will acquire a majority stake in Ambuja. Ambuja, of course, also holds a majority stake in ACC. There will be twin open offers for both the deals. Now, what's the open offer price? The open offer price for Ambuja is 385 rupees per share. The open offer price for ACC is 2,300 rupees per share. So it's at a premium, 7 to 9% premium to the last traded price before the deal was officially announced. So that's one part, which is the open offer part. What about the valuation part? Now, according to a report by CLSA, the deal implies a valuation of $196 per ton for Ambuja, that's standalone, and $116, $118 per ton for ACC. Now, that is definitely a big premium, Karunya, that the Adani Group is paying for this acquisition, because in the past, we have seen a lot of deals that have taken place. We have seen Ultratech, JP, we have seen Binani, we've also seen Nirma Group getting into the cement sector. But all those deals were far below when it came to the valuation component. I think the highest was around $140 per ton. So Adani is definitely paying a premium, but why not? It's paying a premium because it's getting that kind of size and scale. It's a well-run MNC asset. It's one of the crown jewels in Holcim's empire. So therefore, that's the premium that is paying. You spoke about funding. Now, the funding details have not been disclosed by the Adani Group as part of the official announcement, Karunya, and that's something that the street will wait to look out for. More commentary or more details on the exact nature of funding. What we do understand is that the deal will be financed by three relationship banks. That's Standard Chartered, Barclays Capital, and Deutsche Bank. And a part of the deal will also involve equity financing by the Adani family. Now, how they do that, that's something that is still unclear. Also, interestingly, even though Adani came out with its own cement entity, sometime back, there is no listed entity or any group entity of the Adani empire that has been part of this deal. So the acquiring entity will in fact be a offshore special purpose vehicle. Of course, there are some regulatory and tax benefits over there. So that's what we understand as far as some of the key metrics are concerned. The street will look for more details going ahead on the exact route that they follow for financing the deal, Karunya.
But, another thing is that, like you mentioned, Adani has scale. Adani has presence across different verticals, different sectors. It's a diversified conglomerate. So how is a giant like Adani now going to benefit by entering into the cement space at this juncture?
So, Karunya, the cement space is split into two groups, right? So there are diversified conglomerates which have got into the cement space, and there are exclusively cement companies. The exclusive cement companies are the types of, Shree Cement. So imagine Shree Cement and Dalmia are now going to be right behind Adani. Now the real stunning part about this deal is that with one big deal, with one single transaction, Adani has been catapulted to the second place in the Indian domestic sector. So therefore, it's a big deal for them because where do you hear of a single transaction that immediately makes you the number two player in the entire sector? You made an important point about Adani being a diversified conglomerate. One thing that is definitely going to work for them is backward integration, Karunya, because Adani is an infra conglomerate majorly. It's into port, it's into logistics, it's into power, it's into renewable energy. So, the timing couldn't have been better for them to gobble up a massive cement asset, because cement is a key raw material. So therefore, that will feed into the entire Adani infrastructure story. And also, of course, because it's a MNC company, because it's a well-run MNC company, it will also help them to manufacture greener cement. Because keep in mind, Holcim might want to exit India because it wants to ride on the entire sustainability wave and get better valuations abroad. But Adani is also aware of the fact that ESG matters. So they are looking to, in fact, manufacture greener cement going ahead. And of course, it will also help them as far as the entire decarbonization footprint is concerned. So a lot of synergies definitely, Karunya, on the cards.
So, but there's one thing, apart from the funding details that is still unclear, is the management. Who will, run the ship? Who will be part of the top deck at this new entity?
Billion-dollar question, Karunya. At the end of the day, usually when you
$1 billion.
Yes, billion-dollar question indeed. Because, at the end of the day, when you usually have, a transfer of control taking place, usually the acquirer takes the, final shots as far as who the person running the ship would be, or who will sit in the corner office, right? As of now, of course, there's not been any official announcement on any change in management. I'm assuming that there will be a transition period while the deal gets consummated, and after that, Adani might put their own, key executives on board. In fact, there is a report, if I'm not wrong, by Philip Capital, which says that somebody from the Adani family might also be, swung in to take charge and lead the cement business, because the cement business is going to be a big bet for them. Also, keep in mind, Adani is not a group which likes to be number 2, number 3, number 4. They are a very aggressive player. They'll definitely be gunning for UltraTech Cement, and Gautam Adani has been quoted as saying that they're looking to double the cement capacity in 5 years. So from 70, they want to go to 140, which means that they will eclipse UltraTech, which is the current market leader. And we're all aware of UltraTech's issues with the Competition Commission of India. So that's the limitation of Adani. That's the limitation of UltraTech. But the playground is open for Adani going ahead as far as picking up more companies is concerned, and reducing the gap between it and the number 1 player currently, which is UltraTech.
But since you mentioned the CCI angle for UltraTech, there's also some backstory about Ambuja and ACC as well, right?
That's true. So what happened was, a few years back, as part of a industry-wide cartelization probe, the Competition Commission of India, which is the anti-monopoly watchdog, they pulled up several cement players, including ACC and Ambuja, and they fined them hefty amounts. In fact, if my calculations are right, combining both ACC and Ambuja, the fines are about 2,300 crore rupees. Now, that case or that probe has landed up in the courts. It's currently pending with the Supreme Court. And one thing was clear, it was made amply clear by the Holcim management, it's a clear transfer of shares. So therefore, tomorrow any liabilities come, any legal liabilities come, it's going to be Adani's headache. So that's something that we'll have to wait and watch out for, the outcome of that case at the Supreme Court, and what kind of impact it would have on Adani, because at the end of the day, Adani is going to be owning ACC and Ambuja, and if there is a penalty, that penalty is going to be borne by Adani. So that's one angle also that we need to keep a lookout for. Karunya, there's also the rivalry angle, right? Because Adani was not the only player in this race. JSW Cement was also looking at making a bid. They made a bid of about $7 billion, according to the statement made by Sajjan Jindal. And BIRLA, which is UltraTech Cement, they were also in the race. Because at the end of the day, you're a number 1 player, and suddenly you find a company which is so aggressive as Adani coming in. So you have to be seen as trying to make an effort, right? But the big problem, like I mentioned earlier, with UltraTech is the CCI issue. They're already at 120 million tons per annum. So if they were to do this deal, 120 plus 70, which is the total capacity of ACC and Ambuja, 190 tons per annum, that would have caused serious competition concerns. And therefore, what that would have meant is that they would have had to divest some of their assets. So before all that happened, before the CCI sort of gave them any sort of comfort on that front, Adani, I understand from sources, had been negotiating the longest amongst all the entities. It was the hungriest, and therefore you saw that sudden announcement on Sunday evening, sealing the deal, and it's a definitive agreement. It's not an exclusivity agreement, it's a definitive agreement. So for all practical purposes, it's a done deal.
Absolutely. And finally, before we let you go, want to understand how has been the response from the cement sector, from the industry insiders, and are there more such acquisitions or consolidations expected in the space?
This deal is definitely going to disrupt the entire cement space. I would draw a parallel to when Jio entered the telecom space. This might have a similar impact. Why? Because a lot in the cement sector depends on demand, and of course, and the kind of production that a player gets into. We'll have to the strategy of Adani going ahead for its cement business will be very key. Will it push the pedal on the production front very aggressively? That would then have an impact on demand and pricing. So that's an aspect that one needs to keep in mind. Though interestingly, there was a report by Jefferies, and that Jefferies report said that Adani will have to maintain a very high level of EBITDA to get into double-digit ROE. So it's going to be challenging going ahead for Adani. But also do not forget, Adani has captive. For all other cement players, they will have freight costs. They will have travel costs. But Adani having ports, roads, logistics, it has all these things which are captive. So that's where it has an advantage or an edge, and therefore it's well positioned to absorb, a business like this. You spoke about consolidation. Definitely keep an eye out for the other mid cap and small cap players. If Adani wants to eclipse UltraTech Cement, there will definitely be more acquisition and M&A activity going ahead, and therefore the lens will then fall on all the smaller mid cap and small cap players. So the stage is set for a mouth-watering battle. It's going to be the number one player, BIRLA versus Adani, and all eyes on what Adani does going ahead. Clearly a deal that has sort of disrupted the cement sector. It was in the works for a long time, and we of course at Moneycontrol have been on top of it from day one.
Absolutely, and we'll continue to be, Ashwin, courtesy you and all of our colleagues who've been on top of all these developments. But of course, let's hope this turns out to be a mouth-watering deal for investors as well. The stock prices reacted positively. They've settled anywhere between 2.5% to 4% higher for Adani, for ACC as well as Ambuja. So let's see how this pans out, and more action coming up in this space. We'll get you all the stories. Yeah.
Karunya, if I can just quickly make one last point, which is of importance to all the investor community. Bit of a background over here. In the past, ACC and Ambuja were merger candidates, but the merger plans did not fructify.
Sure.
Why? Because of regulatory issues. There were regulatory issues, and there were also certain tax-related issues, and that's the reason why the ACC Ambuja merger, which was planned earlier, was dropped. Right. So what will Adani do? From what we understand, at least, they want both the brands to continue. ACC and Ambuja, both are strong brands with high recall in the market, so the brands will continue. But will there be any delisting? Well, that's something that doesn't seem to be on the cards as of now, from whatever we understand from our sources. But will there be a merger going ahead between ACC and Ambuja? Well, who knows? Maybe at the right time, who knows? They might just merge both the entities, because it is something that has been in the works for a long time. And because of certain developments in the mining front in terms of regulations, the earlier hurdles no longer exist. So the ball is in the court of Adani as far as any potential merger going ahead is concerned. But looks like the street liked the deal, and therefore you saw the likes of Ambuja perking up in trade today, Karunya.
Absolutely, Ashwin. And well, you have given it, you've given our viewers quite a bit to think about. More consolidation could be very well coming up from Adani's side itself. But thank you so much for joining in and for, dissecting the entire deal for us and giving us the finer print and things that, are still awaited and that our viewers should be keeping on their watch list. Thank you, Ashwin, for joining in, and thanks to all our viewers for tuning in as well.